Okay, folks, here we go. Welcome to State of the Market and Happy New Year. It's David Russell, Global Head of Market Strategy at TradeStation. It's great to see everyone again. Hope everyone had a great Christmas, holiday season, New Year, and all of that. Coming back, and well, maybe the more things change, the more they stay the same. I'm talking in terms of the market and the dominance of large cap growth and AI. Let me share a few standardized returns for you. I'm going to share a few links also in the chat if you're interested in some disclosures on the ETFs I'm showing. These are the standardized returns of various ETFs. Now remember, these ETFs are things that we use for essentially indexing purposes, just to kind of be able to easily see stuff um, in terms of sectors, industries. The problem with some nuanced indexes is not everyone has access to them the same way and things like that. So the ETFs just make it nice and simple. All right. So you also want to go to tradestation.com right here, go to Insights, and look at this article we have at the top here. Is big tech starting 2025 with bullish signals? So these are some of the kind of big points here that are kind of interesting to us, and some things we're going to cover, especially down here. And you go down to the charting the market part, and some of this discussion we have at the top about the NASDAQ. I think it's pretty interesting to kind of see what was happening because we kind of had this indication, a few months ago, um, that we were at the beginning of another large cap cycle. With interest rates moving higher and this kind of extreme excitement about small caps and all of that. So let's go down to our overall chart of things. And so I think one of the things that's interesting is just the fact that I mean, I'll just start with the cues. Actually, I got to just kind of show like essentially this kind of slow lumbering breakout in the Nasdaq. I think is just kind of important because this is a major sort of way that when the large growth starts performing, like in moments like this, where it just kind of sits and then it accelerates. And we've seen this at other points in time. I mean, most recently, when you look back, like see how it kind of gets up, it sits, and then it accelerates. It gets to new highs and it accelerates. And here we are just fighting our way through. This was back in July. Things got giddy, took a beating. And this is a whole time when small caps and cyclicals and industrials and financials were doing great. And then we start getting in here. And then basically, when we start getting into December in particular, we really start to see the large cap growth taking over. We had been talking about that at the time. So I think it's important just to realize that. But let's go back to the S&P. One of the things I'll mention is we did our last webinars the week before Christmas, and we talked about several levels and things like that on the S&P 500. And if you want to go back and watch it, but I can just say that pretty much the levels we identified, things played out very much as we had indicated. So if you want to go back and look at state of the market, I think it was the 16th of December, and then my market trends on the 19th. It was a week before Christmas. But if you go back and look at those on our YouTube channel, you can see what we were talking about. We were talking about this level up. We were up here at the time, and then boom, we went down, hit the level we had been more or less talking about. And so I think what's important here is that we have a few things happening, and I'll get to the intramarket stuff. But I think it's interesting to see that essentially the dollar has been kind of weakening, even with yields kind of moving higher. So we're in a spot here where I think a lot of this sort of negative things with high rates and a lot of stuff like that, a lot of that has kind of now been happening. And I think the key thing here is that the market basically held some interesting levels. So we looked for this level, we went down, we tested it, we retested it. So this is the high from back before the election. And we kind of drew a level that was near a weekly close, and then also the lows immediately after the election. So the big rally in the election, pullback, held, went to new highs, tested, retested, and now we're in this sort of tight range. So from my perspective here, this kind of does confirm that we have something that is structurally um, kind of consistent with the longer term uptrend continuing. There isn't anything here. If we wanted to have further weakness, we would not have come so quickly off these lows. So the fact that we defended those lows so quickly around 58.50 really does suggest, in my view, that there remains buying power in this market, and overall it's consistent with the trend more or less continuing. The overall thing I'll say right now is it does seem to be we're in a spot here where the cyclicals remain damaged for the time being, and we do seem to be in a spot where the large cap growth at this point is potentially more set up for the overall strength. Now, as I look now at the market, there's a little bit of upside happening in the VIX. I'm not sure exactly, what's really happening in that right now, but we look just purely at the technicals. I did want to mention that right now we seem to be in a spot where we had some big drops in some of the cyclical areas. That is something where we're going to get to it, but that short term is an overhang potentially for them, and the large cap growth, the NASDAQ, seems to be where the strength is. In fact, we look over here on our key ETFs. That is very similar to what we share on our market trends on Thursdays. Now, we're not going to do a market trend this Thursday because don't forget the market is closed for Jimmy Carter's funeral. But if you look on the trailing 1 month basis, you can basically see here that materials have gotten hammered, industrials have gotten hammered really badly. So in the last month, consumer discretionary, technology, and communications are all leading. So that's kind of like our triumvirate, or these are the leaders of mega cap growth, and this is your cyclical stuff down here. So I wanted to just kind of mention that because this is consistent with the things we were talking about. So let's now look at that's the S&P 500. I'm going to actually let me just very quickly mention we had the Consumer Electronics event this week, and normally it's kind of like for hobbyists, but this year it could really be kind of potentially a big thing. And I think it's one of these things where the AI thing has been underway, but it hasn't really gone super mainstream, and this could actually be the beginnings of some of that with some of the things that are just kind of out there with more companies trying to embrace AI. And I think it's just something now where this is a spot where it could be simply a widening of something grows. It gets to the point when it's established, but it's not yet universal. And that this is in many ways the strongest part of any secular growth phase. You can look at stuff now like quantum computing that like has a tiny little it's a less than $1 billion of revenue. But then you can look at stuff like AI, which has now gotten probably to that point where it's several billion or several tens of billions of revenue. And now it's at that spot when it goes from being kind of mid-sized to big. And I think this is like the real classic thing. This is when a company goes from being a mid cap to a large cap. And I think that is kind of the way to think about this now. It's potentially the sweet spot of this secular growth cycle. And I think that's kind of where AI is. And we might look back at this Consumer Electronics show as that moment. So Jensen Huang speaks tonight to kick the thing off. Then tomorrow, NVIDIA has an investor event. And then they're going to be presenting revenue guidance and things like that. There's a lot of outlook in terms of what are they going to be, a lot of expectation about new products and things like that. But just a key thing is they obviously have the Blackwell, coming out, but that's the key thing. We're at a spot now where that growth is potentially in that strongest and clearest part. When something is new and it's novel, like cloud compute, like quantum computing or something like that, and it's like not really sure how we're using it, that is more uncertainty. But this is more the sort of thing where institutional investors can feel more of a sense of confidence in this. The other thing is Foxconn basically had record revenue on AI server demand. Last week, I don't remember his name, but he's one of the top guys at Microsoft, basically said that they're spending $80 billion in the current fiscal year, which ends at the end of June, on AI things, investment and cloud computing, all the different aspects of it. But that was the estimates were around 65 and they came out at 80. So, I mean, this is underway, but it also bodes well for the current quarter for companies like NVIDIA and for tech and things like that. So all these things now are kind of pointing in that same direction. On top of that, we basically have Fubo. I thought it was kind of interesting. There's this news today and just Fubo. I mean, it's a crazy little stock, but this sort of thing, when you get these deals happening and these giant moves, this also kind of shows, what, if you were bearish, you got hurt. And it's just one of these questions of in a bull market, which just seems to really be confirming that we're in, things like this happen in a bull market. In a bear market, it goes the other way. In a bull market, things work out for the better. This is some kind of deal they're doing with Disney or something. But the key thing is these sort of events coming together are kind of consistent with what a bullish sort of sentiment is. Also, Michael Barr getting pushed out or resigning, whatever you want to call it, with Trump coming in terms of a bank regulator, that's giving a boost to the banks and stuff. So all these things, all the news is breaking kind of in a positive direction. And I think these are all just kind of consistent with a bull market. So as we look here on this, like I mentioned, we simply have that we're holding these levels. If we look at the daily chart of the S&P here, it's really interesting to me. So we actually had a false breakdown under this level by a few points and came shooting back up. So now we're above the 50-day moving average, and we're in this kind of range. For short-term tactical sort of trading, it could maybe pull back a little more or something like that. But at this point, there seems to be some confirmation that we're in that sort of the long-term trend seems to be kind of established by some of the different points we're talking about, especially the way we just keep holding this level. All right, so that's the S&P. Now the Qs are really where it's all. That's the important thing. So if we look at the Qs here, I mean, like I said, this has been this kind of lumbering breakout, and there's a very, at this point, there's not a lot of movement, but again, at the same time, we see that this level has been kind of established. We had a false breakdown under it. And from my perspective here, this is something where people this could have the potential in something like this to simply have any sort of intraday weakness, kind of in that last 45 minutes of trading, to see this get bid and potentially pushed to highs. That's kind of the way things often behave in this sort of environment. Now, I think the important one, let's look at the semiconductors, because this is, to me, kind of interesting here to see this series of lower highs. The semiconductor index essentially has, this is the SOX, this essentially has a bullish ascending triangle here. And with NVIDIA and everything else coming out, when you look at the news out of Microsoft, when you look at the thing from Foxconn, when you look at the fact that NVIDIA is presenting tonight or speaking tonight, presenting tomorrow, all these things kind of coming together. So I think it's kind of interesting. If you look at NVIDIA, they are more or less on track today for an all-time closing high. This was their earnings report. They pulled back, but it's interesting. Look at this level they were holding. Actually, this level should be at that top. Anyway, so again, all these things here, they're kind of consistent with longer term sort of breakouts of things in secular growth, secular uptrends. So to me, this is a very important thing to look at. Things like Broadcom, very much kind of confirming as well. I mean, this is one we had talked about before, but I think all these things at this point also kind of suggesting NVIDIA is really the one to watch here. And from my perspective here, when you look at this sideways movement in the semiconductors, this kind of tight range is the sort of thing that could happen, that could precede a sort of breakout and a continuation to the upside. So I think this level here from the 14th, from mid-October, a close above that level, this could be something people look for some acceleration, especially with this price gap here. This was back when there was a report that Biden was going to do something with semiconductors and limiting trade with China. This whole period here had a bunch of geopolitical risk. There was a bunch of stuff happening, of the trade China stuff. And now, basically that was that gap in that level. We've had a lot of time to digest this. And now it's kind of it's like a balance between geopolitical risk on one hand and secular growth on the other. And when you look at this market overall, geopolitical risk has been something that has faded. Oil tries to rally, it fails. All these things, terrible things are going to happen, just don't. And instead, you get earnings, you get growth, you get whatever. And I think right here, that's just something to think about. This gap here, this relatively tight range on the weekly of the SOX here, I think this is the main chart people really need to be kind of aware of. However, Apple's also interesting. And I think Apple right here is very interesting, the way it pulled back and held this level. There's a breakout on this one. And so I think here's is kind of interesting. This is on the daily chart, it's like Apple again. Now I'm talking about Apple because it's the biggest stock overall. It's key to the Qs. And look at this daily level is a period of consolidation back here around above 240, and it's exactly a level we held here. So this is something also people looking to do things like credit spreads might be looking for something like this. If Apple does kind of hold this level here, and something like NVIDIA accelerates higher or Microsoft accelerates higher, like it was interesting trying to bounce here. But anyway, I think the key thing is that at this point in time, things like Apple have kind of given us a pattern here where it suggests that the worst of the selling, there are signs that this maybe is a spot that it holds. And if that is the case, that's something that is potentially positive for the Qs. So the Dow, DJ, remember in this webinar, we go through the major indexes and look at them. So the Dow here for me is something where, at this point, we have these pretty sharp drop. And I think at this point, the main issue with something like the Dow here is that movement like that, we need to really kind of see. And often when you have this kind of sharp drop, you then have a period when it will have a few more weaker drops, when this is a sharp rate of change, and then you're going to get a weaker rate of change. Then you get the kind of divergence when the rate of change is going lower, where the rate of change is more positive, but the price is lower. And then that actually marks the kind of end. So from my perspective, of the end of the selling. So from my perspective here, when we look at something like the Dow, people should be cognizant maybe of these lows over here, as things to be kind of wary of. Now the Russell is similar. I would say that when you look at the Russell, it tried to bounce at this level, but again, I look at this level here where it was this high back in July, then it was the low after you had this violent rally on Trump, pulled back, broke higher, but it bounced at this level right under 2,300. But here we are back stalling under it. So from my perspective here, when we look at something like the Russell, we might want to be cognizant of this. Yeah, that's a nice level, but this might be more the level, under 2,200, kind of into 21. This low here is actually 2171. So I'm just saying this level from early in this first part of October, this might be a place where people are kind of more likely to really be more interested in this. So I wanted to mention this because, from my perspective here, we have Lucy in the football. I don't have it in front of me now. I made a meme last time about, but the Russell, has that rug pull potential. And when you think of everything happening in large cap tech and everything else, the question is, will people be interested in the Russell, or are they going to be focused on large cap growth? Now, I will mention about large cap growth that we did a trading view idea today on Meta. This is one people might just want to find kind of interesting. Had a bullish inside week, a bullish outside week, also holding some levels across here from October. So I will just mention this is a member of the communications sector, but I do think it's interesting here. Look at the bounce in a name like Meta. These are areas where, if you look at them technically, they're holding higher levels. I mean, look, like I said, this is basically holding levels from, kind of near its highs from October. And you look at the Russell, it's back to a kind of potentially with space down toward its lows from October and much less positivity. So the thing is, if people are looking here in terms of where things are going to maybe have the upside in the next, couple of weeks, do you want something that's under the 50-day moving average of this sharp downtrend, or do you want something more like these kind of large cap names? So from my perspective right here, a lot of the technicals favor the larger caps, and that basically means it's something like the Russell here. When you look at it on the weekly, it gave back this entire gain. They had this sharp drop, so people might be looking for this to be fishing lower down here. Just kind of be aware of that. Now, the TNX is a 10-year treasury yield, and we had talked about how the way it held this level created some upside risk. But there are some things now where I'm a little, if you actually look at this situation with the Chinese bond yields, I mean, the question is, depending on how you measure economies, you could say China has a bigger economy than the United States. This is actually debate and who really cares. But the big point is that China buys a lot of stuff. It's undeniable. They produce a lot of stuff. And it's also true that they're facing an economic challenge or crisis, depending what you want to call it. They have serious problems with their banks. And, my perspective is that China could very well face many years of weakness because not only do they have a banking crisis, it's not clear to me that they have any vision of how to fix it. And they don't have like demographic growth where you outgrow it, where you simply have more people over time. And then that results in, more demand that eventually fixes things. They have a lot of problems. And so the fact is that Chinese yields keep plunging to new lows, and you simply get to a spot where can the 10-year keep going higher in that environment? So, my view here is we have Fed minutes at 2 p.m. Eastern on Wednesday, non-farm payrolls on Friday morning. So let's just see what happens. But, I think here we're in a spot where there is some potential here for the 10-year to peak, or at least stall. And so I'm just kind of watching to see what happens here. My overall view is that, this is something where the economy has, performed relatively well, But wait, there's one other factor I want to mention, which is basically this is talk about the debt ceiling in Congress, where if they don't raise the debt ceiling and the Treasury Department needs to basically do their extraordinary measures, which means basically not paying everything on time, and they can delay. Basically, what happens is if they delay the debt ceiling, it means there will be less issuance. Then we get to the spot when all the tax receipts start coming in. The tax receipts are going to be probably better this year because there's going to be capital gains, strong economy. Last calendar year, the tax receipts are going to start coming in, in March and April. So the key thing is that we could actually be in a case here where maybe yields are not going to go that much higher. It's possible. And so I think we have to realize, again, we're in a bull market. Structurally, secular bull market, you can argue, because we're still near the highs, we haven't pulled back that much. You can argue in a secular bull market, and environments like this, the bad things they just don't always pan out. And so at this point in time, it's possible that yields are peaking here. So I think we're going to just realize that the level now that really is on my radar is going to be, somewhere I'm not actually sure which the level is, if it's the close, but I think it's somewhere in here around 4 3/4 on the 10-year. And if we just kind of sit here and drift around and not much more happens, this might sit for weeks. But the key thing is, if it kind of stalls and cannot go a lot higher, look at these other moments here, and then we get some kind of break like back under 4.5, that might actually be something which suggests that yields have peaked. So I think we just got to realize here is that there is this thing that looked very scary now is potentially kind of stalling. The other thing is that the dollar is not as strong right now. And when the dollar gets too strong, foreign countries sell their bonds to defend their currencies, which pushes up yields. And Germany had strong and high inflation today. It kind of does a little bit to take away this sort of idea of the euro just totally collapsing. So I think right now there are some things that could actually take away this boogeyman and this potential negative on the market in the form of higher yields. So I think that's just interesting to kind of see. And the other thing I'll just say is there is some research that suggests, and we've talked about this for a while, but shelter costs, there's research from the Cleveland Fed that says we're going to see slower shelter costs. And remember, shelter costs are more than a third of the inflation index. So, we could be in a spot here where suddenly we might start getting downward pressure on inflation from shelter. Oil being weak as well, which, we're going to get to. But overall, there might be things here that keep the 10-year from really shooting higher. And that could be something which is, a positive overall in the market. So one of those things that is not a positive for, XLB. Materials, as we have said, we had mentioned how this was troubled and it's now broken these kind of support levels. So from my perspective, there's not a lot of opportunities in this, but this does also confirm materials are cyclicals. Materials have basically broken. They've invalidated any form of breakout that they might have had. This is also kind of consistent with weakness in China, lower inflation, and a secular bull market in tech. So from my perspective here, the main takeaway from XLB is that if XLB is doing badly, then that is actually kind of good for your large cap growth stocks because that's the secular growth instead of the cyclical growth. My main theme for today is the cyclical growth stuff is struggling for now. Now, secular growth being mega cap growth like Meta, this is the XLC, the communications, and we're holding some very tight levels here. And from my perspective here, this is something that actually might be the one that has in some ways some relatively clean upside. We talk about what's happening in Meta, but this very tight range, this pulled back, it was a single candle. It wasn't multiple candles like the way materials was. It's holding these levels from just back here in November. So, you're talking about something that has not much of a pullback. It's been in breakout mode for a while. And so overall communications here might be in a spot where people actually think these can extend. Now, this week, we might get news from the Supreme Court about the TikTok ban, which could also have an impact on this. Things like that are difficult to really, have any, never have an opinion about something like that, but just realize that is a potential catalyst this week as well. Now, energy, 88 is interesting as level now that is, some resistance potentially setting up. Energy could be just walking into the kill zone here. If you're on the bear side, if you're kind of not so hot to trot for energy, and we have been wary of it. Look at energy on the daily. Look at this level from back here. So I think overall, the energy thing overall, it's had all kinds of, there's like going to be sanctions on Iran, and I don't even know what all the things happening in this, but at the end of the day, China's weak. there's going to be more production. And, the Saudis did something. They like raised prices. I mean, they've been cutting their prices to the Asian buyers for like 4 months, and I raised prices one time or something. But remember, the overall thing with energy here is that we're in a situation where, you know, China is weak, and we have a sign of increasing production. And ultimately, OPEC is basically a divided house right now. They all, like OPEC, all wants to increase production, and the Saudis are trying to keep it together. So ultimately, here, I mean, we have talked a lot about the kind of negative forces building in energy. It has been the case. I think the last time we talked, it was up here, and we were talking about, go all the way back, and it basically has followed the trajectory that we had kind of mentioned. So, here we are. We held this level down here, and I think that's, yeah, interesting. I'm not sure if that's the level to watch, but honestly, back up to this low from late October, turning that into resistance. People might want to watch for another day or two, but this could be something now that now opens the door to a move down to 80, because now we have the low and a higher low. That might mean a lower low is next. So XLE is kind of, the more things change, the more they stay the same. XLF is a cyclical as well. Now, this has had, not as much of a pullback, but again, it comes down to time. It comes back to the overall, cyclical nature of things. From my perspective, there's, the financials have some interesting sort of, you look at them, they have really performed well, but at the same time, it's also important to realize here we have this big outside week here, and we've remained inside of that week this entire time. So this is something I think people might want to just kind of, I'm not sure what to make of it, but I think we just got to realize here is that, this is something where it is a cyclical, and, interest rates might not just drop quickly. There could be more of a thing of a sideways movement for a while. And so my view here of something like financials is people might actually just be looking for this to kind of, pay its dues longer. This level around 46 and a half, if you look here, it goes all the way back to this level from October. People might look for some more sort of struggling and kind of swooning along here. This was a big move in financials, and if the emphasis is going to be on secular growth over cyclical growth, that might not be good for financials. All right, so XLI, very similar. I mean, part of it's Boeing, but there's other stuff happening out there, in terms of some of the industrials. China's playing, games with this whole thing of the rare earths that they're doing, and some of this stuff when they're tit for tat with Trump and a lot of these things. And I think right now, something, same thing with industrials. They had a big drop. We talked about how when it broke that level from this mid-November that it had that potential downside, and it did play out. At this point in time, this might be something also where it just needs some more time to chop around. And when something has had that bearish move, it can chop and consolidate for a while. So from my perspective here, the fact we're back under these levels and sitting, does kind of give a sense that this might be just a period of languishing here. That is XLI. Now, XLK is interesting because it has this tight sideways movement, kind of near these old highs. And so from my perspective, here's like XLK, maybe looking at it on the daily chart here, but I think if people, they're aware of this level up here at like kind of 241, we might want to just be looking on this. My sense is the thing people might want to be looking for is, can we close, above like 241? That might be a kind of trigger in this. So it's kind of sitting here, but it's interesting to see this week we're trying to close above that high from back there in July. So I think there's some significant levels from this peak in July when we had that crash, and now we're kind of fighting our way up and through it. And that seems what XLK is doing here. Just looking, I don't have that much more time. Consumer staples, I'm not going to get into much. I mean, this was one that I think the main takeaway in consumer staples is that it's a risk-off safe haven, and it's not doing well, and that also is potentially consistent with bullish sentiment in the overall market. Now, real estate investment trust, basically last webinar we said 40 might be the level that it wants to see. It did test that level, but again, kind of like financials, there might not be immediate near-term downside in yields, and with the Fed kind of in more of a sort of hawkish mindset for now, or less of a dovish mindset, or something like that. Something like real estate investment trust here, these sort of areas might be just kind of stalling and weak. But we did mention that 40 level might be needed to be tested, and it's kind of sitting here, but it might also not do much of anything. XLRE. XLU, last week we did actually mention that 75 people who are patient might get less. Back on the 16th, we mentioned that you know this could go down and test that level under 75, which it did by 30 cents. It was, you know, now this is one I think people have to realize. This is kind of a new sort of secular bull trend here. People are now rediscovering utilities. It has that AI theme. It has the overall kind of idea of electrification, with even if the whole ESG kind of green energy thing is fading, there is a shift toward electrification. There is a general sort of, you know, theme that's been emerging in this stuff, the idea of nuclear energy and things as well. So I think right here, utilities, this might be an area here that people kind of rediscovered in the second half of 2024. And here it is pulling back to this level from really, you know, the end of the summer. So this might actually be something that if we have a sense of yield stabilizing, that this might actually be the first to respond. Healthcare remains just very much kind of broken here, and I think when we look at this, this also has a lot of sideways negativity, but no real clear kind of signals on this one. Now, XLY is the one that holds a lot of Tesla. This is one now where I've been watching. We talked a lot about this breakout of this November high from 2021 around 215, and here we are. And this might actually be something we do need to see it get. We might need to see it get back down toward those old highs. This seems like, you know, Tesla had such a kind of a stunning move that this might just have a period of time here where it needs some more sideways movement. So I'm watching this level, you know, kind of here, but at the same time, people might want to see it go all the way back down to where it was. Remember, this is really pegged to Tesla, and so Tesla reports earnings, you know, in a few weeks. Their deliveries missed, so who really knows? I mean, it's been a, you know, a highly volatile thing. But from my perspective here, one of the things I actually was looking at this is just the fact that it might need to go back down to that level that was the key breakout level that we were emphasizing back in November at 215. So, all right. Well, those are the main things I wanted to cover. Now, just remember that we're not going to be doing market trends this week. We will be doing, so we'll be back, state of the market, a week from today. Great to see everyone. I will see you next week. Have a great day. Thank you very much.